What's up guys, this is Cletous Ngoma and I'm back again with a great lesson. Today we are going to discuss the 3 market phases that you need to understand in order to trade successfully. As a forex trader, you need to be able to decide whether price action is going to go up or it is going to go down in the future. Like I said in the previous lesson, this is going to help you know the right time to take an entry or even take an exit. Not to mention that this is going to give you the power to stay away when price action is likely never going to go up or is it going to go down. Alright, so this is the power that you have. You know when to stay away from taking the trade. Now, when doing technical analysis, there are 3 types of market phases that we focus on, which are the ranging, the trending, and the choppy market phase. So let us start discussing the ranging market phase. Again, I want to make this very simple and straightforward like I did in the previous lesson. So as its name, price action will form a range between the previous levels of support and resistance, as can be shown in this picture. Now you can see that price is trading and it is confined within this resistance level and a support level down here. Basically, in forex trading, a level of support is the lowest price point that price seems to respect. In other words, price will never go lower than that point, which is this support level. As I'm saying, price will never go lower than this point if this support level is strong enough, and a resistance is the opposite, where price will never go above it. So whenever you see that price action is failing to take out the previous levels of support and resistance that it had previously set, just know that you are in a ranging market phase. As you can see right here, a resistance was set here, right, and then I can draw this straight line, right. A support was set right here, and I can draw this straight line. So whenever you see that price is failing to take out its previous levels of resistance and support, then just know that you are in a ranging market phase. So how do we trade the range? This is a very huge question. We trade the range by selling the resistance and taking our profits near the support. This is what I mean. If this is the resistance, right, and you are in a ranging market phase, right, so you are going to take a sell where you see these red dots right here. So you are selling when price approach the resistance, right, and then you take your profit near the support. So if I'm to draw a line, right, let me use my pen, right. So in other words, you are taking a sell right here, right. Maybe you take a sell somewhere right here, right. You put your stop loss somewhere above here. You can then place your take profit somewhere right here, because you are in a ranging market phase, right. This is I'm trying to explain something that you can quickly understand. Remember, I said I'm going to make this as straightforward and simple as possible, right? And you can buy the support levels. So if you buy near support levels, in other words, you can place your buy somewhere right here, right? You place your buy and then you place your stop loss somewhere right here, and then you can place your take profit near the resistance somewhere, right? I'm not going to go much into entries. This is lesson 3 or part 3 of this series. So today I'm just going to give you an insight how exactly we take these entries. I'm not going to go further into that. All right, so let me clear these drawings so that we can move on. Okay, so now moving on to the trending market phase. A trend can be further categorized, or it can be split into a downtrend and an uptrend. Generally, a trend is characterized with what we call an impulsive move followed by a retracement move, as I'm going to show you in drawing. All right, so if I can pull out my whiteboard, right, this is what I mean. Let me draw, right, using my pen. All right, now in an uptrend, right, this is an uptrend. This is what we are calling the impulsive move from here to here. If I say this is my point A, and then this is my point B, and then this is my point C. Now, point A to point B, right, is what I'm calling the impulsive move, right, from point A to point B, and then from point B to C is then what I'm calling the retracement move. right? So generally what you will find out is that this move from A to B, right, if you were to measure it vertically, it will always be longer than B to C if you are again to measure it vertically. For a downtrend, it will be like this, right? And this will be your point A, this will be your point B, this will be your point C again, point B, point C, this will be again your first point A, right? If it's point A, B, C, for the next move it's A, B, C again, for the next move it's A, B, C, and so on and so on. So this is how a downtrend will be playing out. This one being your impulsive move and your retracement, your impulsive move, your retracement, your impulsive move, and then your retracement. All right. Let me go back to my arrow and then clear these drawings so that they won't block what I want to to teach you. Right, so let me delete them. Right, now back to my arrow. Alright, so for an uptrend, price action generally it is moving from point A to B, right, and then to C, as you can see here, right? Then the retracement to C is going to set what we call a support level. Remember, we said that a support level is a price, the lowest price point that price seems to respect. In other words, price is not going below it. So you will see that at C, price will set a support, and then at B, price will set a resistance. Remember, I said a resistance where price will respect, right? So in this AB move, this resistance was set. How do you know it's a resistance? Because price didn't go beyond this level. But what you then find out is that the following A2 to B2 move, right, will not respect the initial level of resistance that was set at B1, but will create a new one at B2. So this is what I mean. You will find that this AB move set this resistance, right? Let me go back. Set this resistance, right, and then there was a retracement. So if I'm to pull back my pen so that you can follow along, right, you can see that this resistance that was set at B1, right, and then we draw a straight line. This is the resistance. This following A2 to B2 move actually did not respect this, and then we will know we are in a what? We are in an uptrend, and then we get even our retracement, right? But the retracement to C2, you will see that C2 will not go beyond C1. In other words, you find that C2 is not going beyond C1. In other ways, the retracement is going to respect the level of support that was set at C1. I'm really trying to explain this very slowly so that you can see what I mean. So this series of moves will keep repeating themselves. As you can see here, this series of moves, they will keep repeating themselves again and again and again and again, forming what we call a series of higher highs and higher lows, right? So this is the shape that is being formed. What I mean by higher highs is if these are the highs, right, you can see that we are getting higher highs each time we get a what? We get an impulsive move. We are getting a higher high each time we get a impulsive move, and then we are also getting a higher low. You can see this low is higher than this, and this low is higher than this. So we will get a series of higher highs and higher lows. Then this is what we call an uptrend. So it only makes sense to us that we only buy, right, when we are at C, at the beginning of the following retracement move or at the end of the retracement. If I'm to clear my drawing so that I can explain that even much more clearly, right? What I mean is we are buying right here. It only makes sense for us to buy somewhere right here, and then we can take our profits at this B1. The reason for taking at B1, we can take at 2 points, right? The first one being at B1 in this case. Maybe you are not trusting that the uptrend is going to continue, or maybe you are a bit skeptical, you don't believe that it's going to continue. Then the safest way will be to take your profits off B1. But if you are someone who is a bit aggressive, then you can let it ride. Maybe you set your stop loss somewhere above. I'm not going to talk much about take profit placement, or how you can be able to nail taking a profit near V2. Yeah, there are certain types of tools that we use, or maybe you can use indicators that we use to be able to identify where to take your profit. I'm not going to actually go, but I just want you to appreciate what I'm talking about here. Now, the last one which I'm going to talk about is what is the downtrend, right? We've already discussed the uptrend, so the last one that I'm going to talk about is what is the downtrend in this category of the trending market phase, right? Now, in a downtrend, the opposite is also true, right? What I mean by that is, remember, we're getting a series of higher highs and higher lows, but in a downtrend, what you actually get is lower highs and lower lows. As you can see, if these one are the highs, right, you can see that this high at A1 is higher than this high at A2, so you are getting a series of lower highs. Why? Because this A2 is lower than A1, so the pattern that is being formed is looking something like this. If I'm to draw, it's looking like this. So what you're actually getting is a series of lower highs. These are the highs, so you're getting a series of lower highs and also lower lows, right? These are the lower lows and these are the lower highs. So that is basically how you know you're in a what? You're in a downtrend. And the best place to take an entry is somewhere here near C2. Place your stop loss right here, and then you take your profit. The safest way is right here near B1, and then the aggressive way is near B2. Now, this is how you can actually trade in a what? In an uptrend. Now, the last one that we are going to talk about is what we call the choppy market phase. Now, the minute you can actually decide whether you are in a trending or you are in a ranging market phase, right? It's going to present as an unclear uptrend or downtrend. It can also present as an unclear, and left that one out. So let me just write it out to you, right? It can present as an unclear range, right? You can't actually tell where your support levels are or where your resistance levels are. You can actually tell whether it's a range, or maybe is it a clear uptrend or a downtrend. You can actually tell. Then that's how you know you're in a what? You're in a downtrend. Now, a good example is this chart. As you can see, if I'm to ask you to draw, let's say you believe that this is a what? This is a range, right? Yes, you can draw some type of resistance, but if you are again to draw some type of support, it's not looking very nice. If you are to ask me, it's all over the place. So you can actually tell, and if you can actually say that this is a downtrend, because it faces looking as if it's want to go down, but instead of giving you a series of lower highs, you can see that this high is now above this. So you can say that this is a downtrend. Even if you are to say that this is now an uptrend, you can actually tell because it's all over the place. So this is how you will know that you are now in a downtrend. In my own opinion, it is pointless to trade the chop because you can't really tell where the price is going to go up or down. Like I said when we were starting this lesson, I said this is going to give you the power to know when to stay away from the market. So as soon as you identify that this is some chop, or you're in a choppy market phase, then the best thing to do is to stay away and not take any type of trade. So after some practice coupled together with a little bit of experience, you should be able to easily identify whether you are in a trend, you are in a range, or you are in a chopping market phase.